All right, what's up, guys? We're gonna just touch on some things here for today's trades. Maybe if I have enough time, I'll recap the other trades for the last 2 days. But yeah, I just want to kind of touch on this here real quick. This was kind of a gimme play for us, especially if you were patient enough to wait all day to get these gains. You probably, banked out pretty nicely. Hopefully, the alerts, gave us the heads up. You pretty much, did what you're supposed to do and, manage your risk and, profited. But pretty much, today SIDU was kind of like the main, well, the only trade that I did. Everything else I just sat on my hand and kind of missed. I know you guys were talking about other, um, plays in the chat room, like Redbox and all that good stuff. I wasn't in any one of those. I pretty much, set my foot in SIDU and just kind of left it there and was gonna let it play out how it played out. So I'm gonna kind of walk you guys through my thought process on that. Just maybe hopefully just kind of give you some a little bit of insight, and then yeah, I'll make this video pretty quick. Okay. So pretty much first things first, we got alerted of this early in the morning. Now one thing you guys probably should know is that usually in the morning, especially when news comes out, and that's why you guys have like the news alerts, the little or at least the headlines. So you can go do your own DD throughout the day if you want to look more into details of these. I don't really need too much information. I just need to know what the article is about to get a good idea of what the catalyst might be, and then from there I decide if I want to, how I'm gonna play it long or play it short based on the news and other different factors as far as price action and stuff like that. Okay. But let's take for example, the one that I did choose, SIDU, KTRA and all the other ones, CELZ. They had decent news, but again, I'm not just relying on the news. I'm looking at things like, the charts, the setups, the volume, all that stuff that I teach you guys in the beginner, tutorial on how to trade stocks. So you guys already know that. So I'm just going to kind of run over the gist of, what I'm looking at here and what kind of made me choose it. First and foremost, that news there, if you see where they talked about 3.5 billion exploration, guys, kind of a little side note, when you see something in the billions, it used to be in the millions, but millions have become so common. When you see articles that deal with things being in the billions, pretty much get a good idea that that stock is going to have some movement, whether it's delayed or not. Understand that something pretty soon, usually it's like within a couple days time, or either right away. It's never usually like weeks and weeks out, so it's not really for swing trading. But usually when you see something in the billions, especially in the article, that means that something is probably gonna happen with movement within that stock, whether it be big investors come in or just plain traders. The fact that you're dealing with billions within that company is a really, good sign or bad sign depending on the article. Okay, so that was one of the things that made me keep that on my radar. Now, another thing here. This was pre-market news, so we already came into the market. Depending on when you got up and looked at it, whatever, we already knew this thing was going to be looked at. Look right here. Okay, so we got this notification at 6:06 a.m. And my time kind of coincides. It's West Coast time. Obviously, that's 9, you know, a.m. This is like 30 minutes before the market opens. Okay. So we get that notification. The rest of during pre-market, it was doing nothing. We get that notification. It spikes up, pulls up, goes to a new high. You were told, hey, it's at a new pre-market high. Regardless of the fact, guys, I mean, this is like, I can't repeat this enough. This is like the day one or, training one-on-one that I teach you guys when the moving averages start to, come back and it's still in bullish territory. Odds are it's really good to long. And if price action starts to thin out, the stock is either going to break up or break down. You should be anticipating that anyways and measuring your risk to reward properly on how you're entering the trade, okay? So it kind of like flatlined throughout the day, which is fine. Stayed red, fine. That's kind of normal. Tried to spike up here. You see a good volume spike, not much movement. That might be a sign for you to want to get out, right? Now, for me, I'm sorry, I'm really thirsty. I've been talking all day. Um, for me, my risk to reward, I mean, the way my plan is, I'm going to stick to the plan when it comes to my risk management. There's no, if the stock hits where I'm anticipating it to hit, great. If not, cut my losses and move on. You'll see my entry. I entered in at like 311. I was expecting the stock. My stop loss for that was around like the 250, 230, $2.30 area. I was willing to lose that much. Now, this thing grinded throughout the whole entire day. And I mean, you guys seen I wasn't even active in the chat room today just because of the fact that, I was just sitting here watching this. I'm just sitting here watching it, hoping that it does something. I'm in this trade. At this point, I'm losing. I'm losing. Let me scroll up some more. If I'm watching this throughout the day, now I'm in bearish territory. But that's okay because remember, your moving averages move as the price action moves. Moving averages and the volume weighted average price, yeah, those are signs to let you know that the stock is bearish. But the thing is, if it's not, if the bearish movement within the stock is not breaking my risk to reward management, I have no reason to get out of the trade. Okay, so understand that. But anyways, I held this thing pretty much all day. So I got in, we got the notification. Here it is, right? High of day, opening bell, shoots up, gets to like 311. This is where I entered in the trade, right at the opening bell. I was anticipating it to keep climbing and climbing because I'm seeing, moving averages coming that way, starting to squeeze, starting to pop up. But as it's getting, the squeeze indicator starts to get stronger and stronger, price action is not moving. So this here is letting me know that, shorts are there, still being able to hold the moving average down and not letting it run as far as it probably wants to. That's fine. Now it's moving into bearish territory. Most traders, will probably think, okay, at this point, I need to start getting out because it's turning bearish. Everything is looking bearish. There's no more squeeze. Okay, that's fine. Me, again, I'm in at 311. Okay, my stop loss, my personal stop loss was in this area here. Let me draw this line so you can see what I'm talking about. This was my stop loss area. Once it broke that, I was going to get out of the trade, whether it was bullish or whether it was bearish. And if you look at this on the bigger time frame, remember you always want to have your two time frames. Let me make this larger because we're done looking at the stats. You already know SDIU stats. We've been banking on this thing quite a bit from the alerts, so that's pretty simple. My risk to reward management is right there. I'm gonna do a whole nother video on risk to reward management for you guys as well too. It's already going to be in the advanced trading course, but so yeah, so there's my risk to reward management. Even though I entered in here, I was anticipating to take profit somewhere within 350, 375 area if it would run that way. Okay, started to die down, grind, still didn't reach that area. I'm willing to take this hit, but I'm waiting all day, and it starts to finally starts to turn up. Now here's another key indication. Okay, we got one golden cross, exponential moving averages crosses, the volume weighted average price. That's great, but it didn't push up fully. At least we know that there's still some strength there. If you're looking at level 2, you can see that movement in the level 2 action on this stock, okay? Then it pulls back and sinks back under. Now at this point, what do you notice here? I'll give you some time. It might not be obviously what you think it is. I'm talking about right here. I'm talking about just in this general area, not the cross. Don't even worry about the cross. The main thing you guys need to notice here is we are in power hour. This is at noon when this is happening, later on in the day. We all know, and I told you guys, like, in the beginning tutorial, how to trade for beginners, that power hour is very important for stocks that, either are going to pop throughout the day or have been moving out the day to make their final moves. So we got that secondary cross. I'm still in my trade throughout the whole day, sitting here on my butt, just watching it bleed out, markets moving slow. We know that Fed Chair Powell was going to announce the rate hikes. All that stuff is pretty much kind of priced in the market. It wasn't a big surprise to anyone, okay? But anyways, we got that little pop-up, and what do you know? It starts to run up. Now, at this point, I'm starting to scale off a little bit, take some off the top, because I've been here all day, right? I'm getting antsy. However, I see here on the pullback that the moving averages is still going up and it's above exponential moving averages. At this point, since I've secured some profit, I'm just going to let everything ride on out and I'm going to take whatever I can get. Then we all talked about how, it possibly can keep going in after hours, right? I'm going to let it test after hours a little bit, especially since I'm in the green. We got a little dip here, price action beginning to let up, and you can see it much more easier in after hours because there's a lot less players in after hours. So these orders that are getting filled are easier to see. And I tell you guys all the time, if you need practice on reading price action and level 2 tape, do it in pre-market and do it in after hours. See if you can, use that as a slower guide and a slower momentum to be able to identify stocks, okay? So, anyways, we got all the way up there, and I'm like, okay, at this point, it's after hours. I got things to do in my life. I'm gonna go ahead and go and take my profits, and that's pretty much it. That's where it was today. Okay. So hopefully this kind of helped you get a little bit of insight, guys. Even though you have your indicators and all that good stuff, your risk management is gonna trump all. Okay. If your risk management is wide enough to where you can sustain the bullish side and the bearish side of the price action, because it's going to move that way. I don't want you jumping into the trade thinking, oh, it's going to just keep going up. That's not how it works, guys. People are going to be buying, people are going to be selling. Okay, so understand that. Just give yourself enough risk management leeway to be able to either continue to hold into the trade until it executes within that range, or have the ability to scale in and scale out, or keep it tight and just cut your loss and move on. I mean, that's really kind of the nature of the game. Risk management will trump all your trading strategies. Like you could have like the greatest trading strategy, but if your risk management is horrible, guys, your strategy is going to be horrible. Okay. And we talked about it a little bit in the chat room today. You guys talked about, your price ranges as far as what you can deal with. And I told you guys, like for me, mine's limit is at $20. And when the stock is over $20, I get a little bit more cautious. Sometimes I don't even want to enter the trade unless, I'm feeling confident and willing to take a risk, but I'll go in with a much smaller size. Very, very important. And for me throughout the day, especially before I'm like getting into the market, I already have it set in my mind, like I'm going to use this number of shares for a price that runs this much, within this price range of, $2 or $4, I'm going to be trading with this many shares. You should already have your risk management in set, in your mind, along with the trade that you're going to execute. So that when the stock starts to make the movements that you're looking for, you're willing to take that risk to reward ratio. And based on your strategy, your odds should be in your favor. Okay. So yeah, so even though it went from, I entered in bullishly, hoping it would ride some more, I gave it some leeway to get pulled back to about the $2.50 range. It didn't stay there. However, if it would have, I would have stuck to my rules and just got out the trade and waited for the next one. But I held tight, even though the signals were giving me that bearish indicator that it's probably going to drop. It was still within my risk management, so that is okay. And guess what? Patience pays off. It didn't hit my target, but it also didn't hit my stop loss. So let the stock do what it needs to do and pay yourself. All right. So I hope that helped you guys. I'll post the trade here, so you guys can look at that. But other than that, we got the rest of the week. Tomorrow's Thursday. We got Friday. Remember, the stock market is closed Monday because of Juneteenth. So we'll be good to go. I think the China market and Hong Kong market will still be open though if you trade those stocks. I don't, but if you want to, go ahead. All right, guys. So till then, stay green.